Welcome aboard. Thank you for agreeing to work with me. This is an exciting time. Financial coaching, one-on-one clients, I think is some of the most rewarding relationships that I've had with my practice. Gives us an opportunity to really kind of dig deep, look at what kind of drives you and how we can get money to work for you and achieve the goals that you want to achieve. Um, Next steps will be just kind of getting onboarded, getting kind of used to some of the basic and simple systems that I have in place. I know it sounds scary and a bit arduous, but I'm going to be using videos and some screencasts to really kind of help you through this process to make it easy. And then we can get to the fun part, which is helping you achieve um, the goals and financial aspirations that you have for the upcoming year. Talk soon.
Welcome in. Hopefully you got a chance to take a look at my intro video. Again, welcome. We're going to get started with kind of the onboarding process. It won't take very long. The one piece of technology I use with clients is called Right Capital. I really like it. It really kind of details all the different elements of the financial planning process that we're going to go through. It has a really cool budgeting feature as well, which a lot of clients really enjoy. So what you're going to get from me with Right Capital is you're going to get an email that's going to be sent to your inbox, and it's going to be titled Create Your Financial Planning Account. This is a dummy or a trial account here just to kind of demonstrate. So you'll click in, it'll say Create Your Financial Planning Account. It'll say Hello Client. I'm writing to let you know, etc., etc. Talks about the security encryption, which is impeccable, protecting all of the private information that you have with me. If you do want more on the encryption, I'd be happy to send that to you. And then what you're going to do, real simple, is you're going to click this button that says Start. Now that you clicked on Start the Process in your email, it's going to take you to a sign up screen here. This is, again, a dummy account, Ace Connell being my name and then my email address. You're just going to go ahead and put a password in, agree to the terms of service, and then click on Create Account. That will log you in. And then we go through the profile generator. This is a good spot where you can put in information that's going to be useful to me and useful to you for retirement projections and various other financial planning modules within the software. So you're going to go ahead and click on Client, and you're going to, first name is Ace, relationship client. The age, you can go ahead and modify this by changing your birth date. Really easy. So just for illustration here, put in 1985. The planning horizon, this is just the age that you're going to set. I would leave it at whatever the default is. Don't confuse yourself there. Go ahead and put in your state, your title, and then go ahead and click on Save. The age change goes to 30 based on the input that I put in there. If you have a spouse, you'll want to do the same thing. Click on this, put in the spouse's name, birth date. I'd keep the planning horizon, again, the same. I'm going to be responsible for kind of tweaking these things, and then go ahead and click and save, and then go ahead and click on Add Participant if you have a child, grandchild, or other. In this case, we don't, so we're just going to go ahead and click on Next. Now we go to the income section here. Again, you're just going to go left to right, click on Salary. This amount, what I want you to do is put in your gross salary amount. So let's just say for illustration purposes, we're going to use 100,000. And usually what I do is I assume 2 to 3% as an annual income increase just to keep pace with inflation. Go ahead and just leave that 3% number the same. You'll click Save. Then go ahead and click on Salary for your spouse. If you're a joint client, you'll put the spouse's gross income, the same increase there. and then you'll click on Social Security. Leave these blank. Most clients that I work with are younger, so they're not already receiving Social Security. You can just leave this at 65, and we can just use a simple estimate for what you'll be drawing when you reach that age. I know for younger clients, this is way off into the future, but it's always nice to kind of see that from a retirement projection standpoint. And the same for your spouse if that applies. Then you're going to click on Next. Once we click that Next button, we're now on to step 3, which is the saving portion of the software. And this goes into retirement savings plans. And the first two are going to be my 401k here and my spouse's 401k. You're going to want to click in here. And if you know what your contribution amount is, you should know through a pay stub, or you've committed this to memory as to how much you're contributing. Typically, just to get the match, usually a 4% contribution is typical. But again, you're going to want to verify that with a pay stub. Saving start, you can basically put in when the savings have started. We can just put already started. That's applicable for most. Percent of salary is fine. We can always modify this once you're done with the profile generator. The savings ends upon my retirement age, and then this basically details a match. Usually your employer will lay this out for you. Maybe they match 100% up to 3% of your salary. This is where kind of going through your plan documents and benefits is very helpful to kind of put in this information. Don't worry if you don't know. You can always just leave this defaulted to these numbers here, and we can just go back and make these adjustments as we go. Click the Save button. And then another spot here is click Add Saving. This is where if you have other 401ks at other institutions, or maybe you have a current health savings account at work, you can add these here as needed. Again, don't worry if this isn't perfect. Main thing is we just kind of want to progress if you don't know. So then you'll click the Next button, and that brings us to our net worth, the step 4, which is the net worth, accounts, properties, and insurance. This is very similar to kind of a mint.com, if you've used that software before, where you can link an account and type in, for example, Wells Fargo. You'll click that, and you can just type in your username and your password, and that'll sync all of your accounts in one place so we can calculate net worth. So this would be IRA accounts, your 401k, all of this information, any sort of account that has a part in your financial life. You're going to want to click on the link account and just go ahead and type the institution where the 401k would be held at. So, Fidelity, for example, would be Fidelity Net Benefits 401k. A lot of people have 401ks at Fidelity. You just type in your username and your password and click connect. As far as adding an account, you can add things manually. So you could put in, a loan that you have, and you can do a manual input. Again, don't worry if you don't have all of the information at once. I can always go back in and help you here. But the main thing, really think about all of the accounts in your financial life and make sure that they're linked in here if you can, so I can get an accurate depiction of kind of where you're at. And this gives a good first cut when I'm doing an analysis for you. All right, we'll go ahead and click on Next. Here we go into living expenses. This is very important for budgeting purposes. Living expenses should reflect your average monthly expenses prior to retirement, exclusive of any other expenses you've entered, such as mortgage, debt, and or insurance payments. So a lot of this is going to be, what you budget for every month. Your eating out expenses, your utilities, anything that's non-mortgage related. You're going to want to put in here. So if you don't have a mortgage, rent would fall into the living expense category if you don't have a mortgage. Next section will be taxes. This is pretty straightforward for qualified and long-term capital gains. I would leave this the same. Most of us don't have local tax. That would be in your pay stub if you have it. And then your filing status, in this case, it defaults to joint status. But for a lot of you, this will be individual if there's just one person in your household. Go ahead and click on save. You can always click on adding an expense, whether you have, unfortunately, alimony, if this applies to you, medical and charitable giving, or other if these three categories don't meet what you're looking for. Go ahead and click on next. And now we've kind of hit the goals field here. Retirement, I would leave this number at 65. That's kind of the standard, financial planning target age. I would leave it at 65. Even if you want to retire at age 40, we can change that later, but I would leave it at 65. Retirement expenses should reflect your average monthly expenses during retirement. Again, I would probably just leave this blank for now. Your living expenses might be a good estimate there. Annual retirement health costs, I would leave these. I would leave these alone. These are just manual inputs here, and I would just avoid adding anything there. And then you can go ahead and click the complete button. And we're done. And I would get this information and be able to look at your respective accounts, look at your budgeting, and get a really good picture of what's going on in your financial life. So this answers questions as far as the onboarding process for Right Capital. And on to the next thing.